Well, guys, it's finally happened. A deal between the US and China has been done, rolling back tariffs to where it all began. But is this good enough for the markets to make all-time highs? And what are the good, the bad, and the ugly signs right now for all of us as investors and traders? In today's video, we take a look at everything that we need to know right now, along with one of the best signals that's just occurred. Guys, there's so much to discuss. Let's get into it right now together as we go through everything we need to know about the markets around the world. Well, welcome back everybody to the Daily Show. My name's Tom, and what a sea of green we just saw as markets rallied big time and set off so many different alerts that we need to talk about today. Let's kick things off, though, by talking about this US-China joint statement, which, of course, had 145% tariff rollbacks to 30 from America to China, and China to America 125 to 10. Now, it's important to note there's a 20% fentanyl tariff there, so it's kind of like 10 and 10 in terms of what has been shown here from America and China's trade deal. Now, the big news story was that, and of course, it led to everybody rallying into the markets. Most of the action happened pre-market, and by the time we opened, as we always do in our Monday live streams, we pretty much were right at resistance. And as it turned out, that resistance held throughout the session. But did we see any big dark pool trades? Well, first off, let's have a look at the good thrust signs that we started to see as technical analysts. And what does the data suggest tends to happen next? Well, first up, the advanced decline lines went bonkers, making new all-time highs and, of course, leading into generally what is the beginning of potentially another bull market run. More importantly than all of this, we actually started to see some big breadth thrusts that are on top of what we already had 2 weeks ago with the Zweig breadth thrust. We've now got a de Graaf breadth thrust, which we'll have in our next video. So make sure to subscribe for that so that you can see the stats surrounding what is widely considered one of the better ones out there. Now, what about the NASDAQ? Well, we've been talking about the 200-day moving average and why it's such an important indicator. Often markets will sell off this level, and it's almost like this news was kind of set up so that we could get through and make sure that this market was not going to see what is generally a big sell area. Now, of course, when we break through the 200, this is a big deal because traditionally when that's happened, even if the market does break below the 200 in the future, it's usually bought up at least initially. And this has everybody wondering, are we still going to follow some type of 98 narrative, or are we on the 1996 narrative where markets just keep V-shaping up and we almost don't see any pullbacks? We'll look at the two examples in a moment, but one thing's for sure, smart money was most likely starting to reduce their positions around the most recent price. According to the latest data here in terms of smart money flow from wallstreetcourier.com, you can see that basically us as retail traders continued to pile in, although sentiment reports claim that we're not doing that. And of course, you can see here that smart money was starting to slightly relax their position. One thing's for sure, they big time purchased off the dip, which we already knew. And of course, that's why we're looking for pullbacks to be met by bull demand moving forward at this stage. Another big sign was, of course, this earnings season. Buybacks, buybacks, buybacks. While no business seems to be spending any money on the future, which is a concern for us as investors, they are certainly spending money on artificially inflating this market. And we've just seen an all-time record in buybacks and more to potentially come. Initially, we heard that there was going to be thirded to only about $350 billion this year. The latest reports have $800 billion to potentially even back into that trillion-dollar nature of buybacks throughout the year. And as we know, buybacks are a big deal when it comes to helping support the markets. So it's important for us to now have a look and say, okay, whenever you see a big change in government, do you tend to see a pullback? Well, of course, we expected to see one. We expected to see 10 to 12% pullback this year. The tariffs obviously got in the way and continued to get a deeper pullback almost on that 20% market. But since that point, usually around 100 to 150 days into a new administration, we tend to see a turning point for markets. But what happens after that can be a little bit sneaky. And you'll notice that especially in big reform kind of presidencies such as FDR, you'll see that the markets actually ended up tanking later on. So should we actually look at this as a positive? Yes, for now. Do we think there could be an all-time high? It does seem likely that that is going to happen based on the current structure, but could we get pullbacks in between? Well, I certainly think pullbacks are overdue based on, of course, how many people are now going to be in longs, specifically over the last 24 hours. But the question then becomes, will Wall Street find it to be best to do as a trap? And that's what we're looking for. So what other good news do we have? Well, the S&P 500 has cycled in terms of VIX cycles from above 45 to under 20. And according to Subu Trade here, you can see that that tends to lead into big 3-month gains. And although things can get a little bit shaky over the next couple of weeks, generally speaking, again, it's another one of those 100% signals when it comes to the next couple of months. And that would make sense as well with the tariffs. As we know, tariffs are now going to be implemented. It looks like 10% across the board is going to be where they stay. And you might say, well, yeah, 10%, not such a big deal. But ultimately, remember, whenever you have a tariff that's 10% plus some of these other special tariffs, you note that eventually that comes through the pipeline and tends to drag on economies. In previous tariff times, it has taken up to 1 to 2 years to actually have a massive effect. And it goes in line with everything that we've been talking about here on the channel, that we expected 3 to 6 months of main inventory, that we expected the markets to initially purchase up because everybody seems to be kind of buying into the market and buying products. We saw that in the used car deals last week, already starting to tick up as everyone gets terrified of the tariffs themselves. And of course, we basically then see demand fall off sharply in the future. But for now, it's all green, all good when it comes to the markets, and retail is leading the charge. According to Bank of America's latest data stats, retail have been purchasing at the fastest rate ever, while institutions have kind of been selling, especially more recently. Now, over the last 24 hours, they may have regretted that, and some of you guys out there would be, of course, loving life as markets have rallied up. That's not to say that they won't try to push the markets down at some point and get a better price. So then it comes back to this particular chart, the 98 narrative. Now, we've had this as the most likely narrative so far, but of course, this tariff deal took us from exactly where we were as of Friday's close to above the high. And we suspected last week that at least the NASDAQ and the S&P were potentially going to make this higher high based on the Federal Reserve Day. Remember, what happened during the Fed Day is nothing really much in terms of announcements, but price trapped shorts and started to rally up big time. Now that rally has hit, though, some of the key resistance areas. So, of course, we're looking for dark pool trades. We're looking for large options levels in terms of call walls and other signs to potentially get any type of 98 narrative. Will we now go to an all-time low? Doesn't seem likely based on anything we've seen here. And, of course, our main scenario was maybe something like this was possible. Either way, though, we always expected the markets to rally based on the Zweig breadth thrust and some of the other good things that are going on. When you have a look at the NASDAQ 1,000 days based on the 95 into 96 narrative, you guys can see here that if we are following this particular time, and we've still got a lot more to run in these markets, then usually these can be what we call dull markets or melt-up style markets. If we're following more of a 98 one, then we could be seeing more of this type of thing, followed by that, followed by this type of recovery. But I think the advanced decline line, the thrusts, all of this type of stuff does have the right type of signals to say an all-time high should happen this year. And one of the reasons why that is pretty clear has been the infotech. So obviously the semiconductors, SMH versus SPY, and XLK versus SPY, which both broke out before these particular announcements and showed us that any pullbacks should have been met by bull demand. Remember, when you're being led by tech in the US, that is a great thing. When you're being led by defensives, that is a very bad thing. So right now, it seems to be led by tech. We've also seen the dollar switch around, and this is probably where the bad comes in, the ugly, because we're about to see inflation figures as of Tuesday's open, 8:30 a.m. New York time. And as you guys know, these inflation figures may be a little bit worse. Could they be really bad? I don't know. What do you guys think in the comments down below? And this is leading to the US dollar spiking again. And probably worse than that, we're starting to see the US 30-year coming back up. Remember to watch that 4.95% to 5%. This is now going to be the bear's main case scenario, which is that if we go back to panic stages, could we see a freak out in the debt markets? Let's now take a look at the largest trades of the last 24 hours. The notable ones came in with the TQQs, possibly a little bit of profit taking going on here. Obviously, the other one we had was over on this point as we went sideways, then we saw the trap, and then we've rallied so far up. So we've got a couple of large trades coming through, though not notably massive in terms of size. And also we have a couple of trades coming through the Qs themselves. A big one here near the high. Again, could it be a sell? I would say someone's probably taken some profit at these resistance points, but that doesn't mean that it is a change of trend. Remember, the trend has still and always has been so far intact to the bull side. We're looking for a structural movement towards the downside before saying, any type of pullback is going to occur. But now the rallies have obviously continued to outlast. Let's now have a look at the overall sector rebalancing here. You can see it was gold off, all defensives on the low end, and semiconductors on with of course, consumer discretionary. That basically is a full risk on session and now takes us to 5 days of risk on with semis leading the charge. And the main thing there is that semis are leading the charge. And that comes back to, of course, that breadth thrust that we had 2 weeks ago, which is got everybody basically thinking that this market is go ballistic. And why? Well, as Wade, breadth thrusts tend not to be wrong since the 1950s, though they were wrong in the Great Depression. So, of course, you've got to remember that like any indicator, it has to be taken with everything else. We do have some big earnings coming this week as well, although that's going to be overshadowed by inflation and more tariff and trade deals, I'm pretty sure. JD, SEA, you've got Alibaba also on Thursday. So this basically week is all about Chinese stocks, and you guys can see here the options expected moves. Some of these are pretty large, expect hundreds of billions of dollars of movement in stocks. Now, what about gold, silver? Well, gold, of course, geopolitical risk tensions started to subdue. That sent gold down big time, although silver held pretty well. So again, the gold-silver ratio is playing out at this stage, although not in a way of massive kind of silver runs just yet. We'll look at that later on today's video. Let's now take a look at the S&P. You can see here it rallied through, big gap up, dropping so many gaps now. We've got gap down here. We've got a gap over this area. We've got a gap left from the other day. That's quite a few, and generally markets love to get a nice retrace in them at some point. The problem is where? Have we seen enough dark pools to really suggest that it's going to sell off just yet? Although I think the futures market might try to sell a little bit at this resistance, it's not enough. I mean, you're basically putting a guess in those kind of words. The other thing is that we did see the market go above what is technically already a pretty big resistance area. And that suggests that sometimes squeezes can occur. So we are currently closed at the high. That's important to note. And of course, we're looking for more information. If you're long, would you be saying this is a short market? No, you would not. And of course, at this point, you would be very, very happy with the way that things are playing out. Same kind of thing goes here for the SPX in general. And of course, with the US futures, you can see the new options high and low levels. Although we did hit that resistance of 58.40, which we do think is resistance in this case, we still do not have a change of trend. And if you traded the session and you managed to pick up around that 57.90 area, 5800, which we were talking about, it was okay to the bull side. But for now, that would probably be the main level I would watch on the small time frames, the low of the last session at 57.88. For now, the market is, of course, a series of higher highs and higher lows coming off that really sneaky kind of trap that happened last week, which totally flipped the game of course, this particular structural level. As we suspected, a new high was most likely coming. The trade deal didn't know that, but of course, we did suspect that might be occurring. Let's now take a look at positive gamma. It was certainly positive gamma across the board. 5800 is going to be the level to watch over the next session. As you can see here, calls are stacking up all over this level. So if we continue to hold high, well, that means that there'll be a lot of people offside and hedging will have to occur. But 5800 is kind of like the core wall resistance. And currently we're actually trading above that level. So again, markets may want to come and fall underneath that area. Tesla is in massive positive gamma once again. 330 opens up on the resistance. We've talked about this. You break the 300, you push towards 330 on the charts, and 325 is the most written call this week. When we move over to NVIDIA, it's 120, 120. We're above that. So again, technically in positive gamma breakouts, and really semiconductors across the board are looking quite a lot better on the charts. Let's now speak about the charts. The first up one is, of course, bonds. Bonds reacted, I would say, relatively positively considering. So if we go to the 30Y, which is the main concern at the moment, it's up at 4.9, yet still high yield junk, which is what we were just looking at, was up across the board. So bonds haven't reacted to freak out yet, but this will be the area to watch if you're a bear, if you're feeling like there's a negative here in the markets. The yields will probably become a concern at around 4.95 to 5% on the 30Y. And you can see here that the bonds yield adjustment option spread has declined. So that's basically telling us that no one is freaking out right now in this current market. What about the US dollar? The US dollar, obviously, you can see here, broke through the inverse head and shoulders. Traders will be happy. We first got alert to this Thursday last week that we were breaking up. We haven't hit that key technical of 102.50 yet, so maybe the dollar has a little bit more in it. That's put pressure on gold. 61.8 fib retracement was not enough to hold it through all of this news, and we're putting massive pressure now on the 32.20. I'm not sure I'm feeling the 3200 level that much for gold. You could definitely make a case here as a double top, and if this does breach, remember that double top's going to pressure in the 3000 level, which is probably the next major support for gold. So could it be that gold is going to go to 3,000? We started to sour a little bit on it in terms of more of the investment side as it rallied so hard at 3,500 just the other day. But for now, it's holding the level and we'll look for some kind of replication there. Meanwhile, silver holding up really nicely, actually doing okay. I mean, it didn't bounce. It obviously hasn't moved that much, but we're still looking for things like a 33 plus breakout. And obviously the ultimate goal is to get it above 34.50. If that happens, we could be on for a massive squeeze. US oil squeezed to 63 a barrel, which is an excellent take profit target for people that were long. Congrats if you were. I think the geopolitical tensions are wild on this particular thing, but hey, everything has an opportunity, I guess. Tesla, it's still bullish for now. Could we move it to 330? Hopefully. In this case, the market broke out, obviously, from that 270 to 295, 300 level. And for now, this is kind of the more likely scenario than not. What about semiconductor SPY? Well, this is huge. 0.4 broken. So we first found out about this closure break back late April. And this, of course, showed us that we were probably in for some form of any pullbacks being met by bull demand because the most important sector was starting to perform how it needs to. This is now a huge breakout. So that means that pullbacks, you would think, are going to be met by bull demand across the board. What are some of the pullback reasons? As we've mentioned, yields could push us there. So that is concerns about the debt maturity this year. And of course, also inflation and still the damage that tariffs may have already started to do to the economy. All of these things are still bearish, but price action currently is no doubt, looking bullish at this stage. I mean, there's no sign yet. We did see Nvidia kind of break up above, again, the highs. So again, pullbacks, you're going to have to think that there's going to be buyers around these levels. And 120 plus is obviously a big key level in terms of options. What about Google sitting in between? There still are a lot of opportunities and there's a lot of abundance in this market if you feel like you've missed out on stuff. Google is not going to benefit as much from the trade deals. The big one in terms of beneficiary was Amazon, because Amazon went ballistic, breaking up 208 and 8% up on the session. When we take a look at HSI, you guys can see here China markets were up, but they're starting to give back a little bit. US 2K hit its next resistance of 2100 and then started to sell off that level. So there is a bit of correlation here. And the NASDAQ also hit into that 20,600, 20,800 level, which if you remember back on the weekend video, this was where we thought maybe there'd be a bit of a problem if we did hit it quickly. And we have done so. So again, some correlation going on there. I noticed a few people in the chat mentioning as well that the German markets and a lot of international markets just kind of sat around. That's probably because the trade deal really isn't that beneficial here. It's more beneficial, of course, between US and China. What about Bitcoin? Well, the main thing here was that we hit resistance very quickly. A lot of things like Ethereum also hit 2,500, 2,600, which is, of course, a resistance. And it's just consolidating in an upward trend at this stage. Small time frames will have people thinking it's short, which is, of course, this lower low that's being formed. But hey, do you really want to go against a big, strong trend? It can be quite dangerous. Inflation numbers are the watch, guys. This is what everybody's looking at. Core CPI, 8:30 a.m. at New York time. I'm very interested to see these numbers because, of course, I just want to see what's happening here and whether there's reasons why we might be scared of these ones, actually. But hey, we don't know yet. We'll see about the inflation numbers. They're coming very, very soon. What's your guess? Put it down below. And to summarize today, I guess it was, of course, a day where the market was going ballistic. It opened up so heavily that it was very difficult for people, particularly in America, to probably get hold of it. You guys would have been sleeping. And it's one of those ones where I think a lot of people can feel extreme FOMO. We are about 3% up from that resistance zone that we saw on last week. And of course, we don't really have enough dark pool trades to say anything particular is going on right now. But in our experience in markets, and I know you guys know this as well, remember, you don't have to have FOMO. You come from an abundance mindset because there are always opportunities. So if you feel like you missed down this rally and you weren't able to buy the dip, or even if you took a little bit of profit at that key level the other day, don't worry about it so much, guys. There's always another opportunity. And what you'll find in our next video when we go through the 200 daily is that markets tend to come back to these key critical zones because good levels usually get revisited. Thanks so much for watching. Make sure to subscribe. We'll see you in the next one. Bye for now, everybody.